What's up, traders? We have a very important video today. Today, we are going to discuss all of the very important data points we're going to get about the economy this week. And based on that, what do I think about the condition of the current stock market? And lastly, we'll look at a few potential trades that I'm interested in right now. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I am blessed to bring in multiple six figures a year from the stock market. And I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, I need you to go ahead and smash that like button. That just helps push this video out to more people. And do remember that I am not a financial advisor, and this is not financial advice. All trading comes with risk. I'm just showing you how I've built wealth over time. Now, I'm going to start this video off a little differently than I do most videos, because just recently I was doing some Bible studying and I came across this verse that talks about diversifying your investments. And some of the words within the verse are almost identical to what I tell the Trader Freedom community when we are selling puts. So looking here, the verse is Ecclesiastes 11:2, and it says, "But divide your investments among many places, for you do not know what risk might lie ahead. When clouds are heavy, the rain comes down. Whether a tree falls north or south, it stays where it falls. Farmers who wait for perfect weather never plant. If they watch every cloud, they never harvest. Just as you cannot understand the path of the wind or the mystery of a tiny baby growing in its mother's womb, so you cannot understand the activity of God who does all things. Plant your seed in the morning and keep busy all afternoon, for you do not know if profit will come from one activity or another, or maybe both." Now, if you're familiar with the channel, you know that I love the wheel strategy, and that is where we sell puts to enter into a stock at a cheaper price and sell calls to exit a trade at a higher price. But the thing is, you have to be in the game in order to win it. Or in other words, you have to plant a seed in order to get your harvest. And as you may know, I love to sell puts on red days. And the reason I love selling puts on red days is because you get to collect more premium than if you were to do the same thing on a green day. And so it's almost like on red days is when the soil is most prepared for a future harvest. And so on red days is when I get extra aggressive when planting my seed. However, just as this Bible verse says, I don't wait around for red days. I plant my seed on green days too. I just look at the data in order to make the best trade to make the highest probability of profit. And that way, and since none of us know what the future holds, I know that I have seeds planted in multiple different areas and that I will reap a harvest at some point somewhere. So I just had to share that. I hope that blesses you and that message meets you where you're at. But without further ado, let's get down to business. Now, as you know, I always shout out members of the Trader Freedom community who are just doing amazing things. But for this video, I actually need to share my own win. And so last week on Friday, I said, this week's win isn't about a trade, it's about the impact. Over the past few weeks, 3 different people have reached out to say they're setting up trading LLCs because of how much they've been making from the strategies we use in the community. That's huge. Not just because of the income, but because it means people are treating this like a real business, building structure, protecting profits, and scaling with intention. That's what this community is all about. Real wins, real growth, and real freedom. The fact that I'm a small part of your success just makes me happy. Keep stacking those gains and keep building. I'm genuinely proud of the moves you all are making. Let's keep going. Now, one thing that I didn't share in this message was that also several people have said that they are ready to quit their 9-to-5s because of the money that they are making. And whenever I receive that message, I'm like, maybe let's wait just a little bit because we don't want to jump too early. But that within and of itself just speaks to the results that people are having. And I'm so proud of everybody within the community. But if you're looking for an awesome community to join, not only will you get to see my actual trades when I enter them, but you'll get my full options framework via the Trader Freedom course. You'll get access to ask me questions at any given time, and you'll be within a community of other traders who all have the exact same goals as you. So if this interests you, the link is in the description below. Come and join us. We would love to have you. But now let's discuss the market this week, as we have a busy one coming up here shortly. So looking at the economic calendar for this week, we have a very busy week ahead. And so we can see we don't have anything scheduled for Monday. However, Tuesday, we get our CPI reports. All right. And so this is basically inflation data, and we will be able to see where inflation data was for the month of June. And if we look right over here, it is expected to be about 2.7%. Now, this is big because, of course, most people want the Fed to lower interest rates. And Fed Chair Jerome Powell has already suggested that if it wasn't for tariffs, that they would have already started their rate cutting process. But if the inflation data remains low, then that will help show that tariff fees have not impacted prices as much as previously thought, and they can surely begin cutting rates sooner than later. All right, and then later that day, we have a ton of Fed speakers, so that'll give us an even bigger insight to what they are thinking. But then if we head to Wednesday, we'll get a bunch of PPI data and a few more Fed speakers. And then on Thursday will be a big one because we will get the initial jobless claims. Now, of course, the Fed has a dual mandate, which is price stability and maximum employment. And so the jobless claims data will also help us get a better insight into what the Fed may do next. And then later that day, we will get a bunch of Fed speakers again. Now, looking at the CME Fed Watch tool, we can see that it is quite expected for the Fed to cut rates during their July 30th meeting. We can see that there's currently only about a 4.7% chance that the Fed cuts rates during their meeting this month on July 30th. However, if we look at the September date, then we can see that there's about a 59% chance that they cut rates in September. Now, depending on the data that we just talked about, can absolutely change these numbers dramatically. But as far as the data that we have right now, this moment, it looks like our first rate cut will be in September. And that, of course, will be beneficial to the stock market. Now, on top of all of that data, what else we have going on this week is that we are starting earnings season. And so if we look over here at the calendar, we are now checking out Earning Whisper's calendar, and they conveniently show all of the big name companies that are reporting over the next month. And so now we can see both Monday and Tuesday, we're pretty much getting a lot of bank stocks who will be reporting, and that'll give us a little bit of insight into how customers are doing. And then we'll get a few other big name stocks like SML, Netflix, TSMC, Pepsi, American Express, and more. Now, as far as the bank stocks, if many people are taking out loans, it generally means that they anticipate economic growth or need funds for investments. All right, so if more people are taking out loans from banks, then generally that is a good thing. However, it could also indicate a need to consolidate debt to cover unexpected expenses, which might suggest economic hardship for some individuals. But generally speaking, you see more loan activity during good times. And so we will get that information shortly. However, I wanted to also share this data point with you. Here we are looking at Bank of America's private client equity holdings, and we can see that it's currently at 64%. So that means that wealthy investors pretty much now have 64% of their total assets allocated to equities. And this is the most since 2022. And put quite simply, that just means that rich people believe that the market will continue to rise with the data that they have currently. And so we can see back going all the way back to 2007, it was at about 56%. And then the 08-09 crash occurred. And then towards the end of that, wealthy investors only had about 39% of their total assets within equities. And then as we know, after 09, the stock market started to rebound. And we can see it went all the way from 39% in 09 to 63% of their equities invested in 2015. And then it stayed within this range here. And then we could see the COVID pandemic happened and it took their assets down to 54% allocated. And then as the market started to rebound, they started to put more and more back into stocks, and it went all the way up to 66%. And then in 2022, we had the bear market year. So it was less and less and less. And then now we have rebounded, and now it currently stands at 64%. And so put simply, rich people just believe that the stock market is going to continue to go up from here, and they are putting their money where their mouth is. But with all that information, let's go ahead and look at the chart for the S&P 500. So now we're looking at the chart of the SPY, ticker symbol SPY. And we just hit a new all-time high last Thursday at a high of 626. Now, I'm on record saying that I think that we will finish off the year around 660 or 6,600. But I do believe that we have more room to run, mainly because our US companies are doing amazingly well and are continuing to grow at a rapid pace. And over long periods of time, that is always what will fuel the stock market. And all of our companies are doing amazingly well, and we will see that again after this earnings season. So I believe that we'll get somewhere around 660 by the end of the year. But in the short term, I believe the worst case scenario is that we would go back down to $600. All right. And just naturally, we would see a lot of support there because you'll always see a good amount of support or resistance for those round numbers. So this could be a multiple of 10, multiples of 20, multiples of 50, or multiples of 100. And so because 600 is a nice round number, we would definitely see some support there if things were to get really, really bad. However, it would take a lot of bad things happening in order for us just to get back down below that mark. We would need a lot of selling pressure. All right. But as of right now, with the data that we have currently, as of today, I believe things are still moving in the right direction. And so let's go ahead and take a look at a few stocks that I'm interested in trading currently. First stock is Google, ticker symbol GOOGL. And the reason I love Google as of right now is mainly because of fundamentals. And what's crazy is Google is one of the two Max 7 stocks that has not gone up quite tremendously over the last year. And the reason for that is that they believe that AI will hurt Google's business. And I don't think that can be further from the truth. And the numbers speak for themselves, as Google is the most profitable company in the US. And yes, you heard that correct. Google is the only company in the US that had over $100 billion of net income in 2024. All right, it was not Apple, it was not Nvidia, it was not Palantir, it was not Meta. Google was the only one with over $100 billion in net income. Well, how could that be that AI is destroying their business, but yet they still make more money than anybody else? And I always use the comparison. In 2022, I was a heavy investor in Meta as the stock just kept selling off more and more and more, in big part because people thought that TikTok was going to be the end of Facebook and Instagram. And all I did was I looked at the numbers, and the numbers showed me that Meta's business was continuously growing over and over, year after year, quarter after quarter. And for an investor and a trader, your biggest opportunities will come when there is a big discrepancy between the true value of a company versus how the market sees it currently. And at that time, the market seen Meta as a dying company for whatever reason. And so I absolutely took advantage of that. All right. Now, Google has not had the big sell-off that Meta had during that time. However, Google also has not gone up as aggressively as most of the other market has during this time. And while Google still has a PE that is under 20, while the total market is currently at a PE of around 23, I believe that this is a price discrepancy. And so I have been trading Google quite aggressively. But let's go ahead and take a look at the chart. So what I like to do when I am selling puts, I like to look for any level of support. And so if we come up here, we can see that the middle of the Bollinger Band is right at 175.48. And then it has the 200-day moving average right at 173. But if we look right here at about 175, we can see that it keeps bouncing right off of it. Okay, and now it is currently going up. So I believe that it has good support at 175. So let's go ahead and take a look at a potential trade. So now we're at the options chain for Google, and we can see, looking at this red marker here, I currently have a trade open on Google that expires on July 25th. And if you're in the community, then you know that we have made a ton of money off of that trade as of right now. However, if I was entering into a trade today, well, what would I do? Well, we know that earnings season is taking off now, and I want to take advantage of the extra premium because I do believe that Google will have a good earnings. So I may come over here and I'll do this date that is 18 days out from now. So I'll go ahead and select that. And before we move forward with this, do remember that this is not financial advice and this is not a recommendation to buy, sell, or hold any position. But if you do recall, we saw that there was support at the $175 level. So what I could do is come over here and sell a put at 175. Or if you have a smaller account, you can turn this into a credit spread. But me personally, I like a little bit larger margin of error, especially knowing that we're heading into earnings season. So I may come down here to this $170 strike, which is still paying $215 to $220 per contract. And that is a nice return over just a maximum of 18 days. All right, so I come here at this 170. If I was looking to sell puts, I'll just select the bid price, and we can come down here and you can select however many amount of contracts that you would like. This is a personal decision that you have to make for yourself, and that is based off of your account size and your risk tolerance. Because do remember that as we are selling puts, we are essentially giving insurance to the people who own the shares. And we're essentially saying, hey, if Google stock does drop below $170 by this expiration date, that we will buy the shares from you. And every contract is worth 100 shares. So we would have to purchase 100 shares of Google at $170. And for doing so, it looks like we'll be paid around $220 currently. All right, so if we look down at the profit and loss chart, we can see at these green dots right here is where Google's stock is trading currently. And if the stock price goes up, we just keep the $220 we were paid and we go about our day. If the stock price stays around where it's at currently, we keep the $220. If the stock price goes down, we can just keep the $220. However, if the stock price goes down below $170, which was the price that we set, then you can see we'll start to make less and less money from it. And then our break-even point looks to be right around $167 roughly. And then if the stock price were to go down even further, then the contract would be worth less and less and less. However, I would not care because I am fine with purchasing the shares at the price that I selected. All right, it's almost like getting a stock on sale, and I absolutely love sales. All right, but I do understand that Google is a little bit more of an expensive stock, and not everybody could buy 100 shares of it. And so you could easily just turn this put sale into a credit spread, which would drastically lower the amount of buying power that you need in order to put on this trade. Or you could just simply trade a stock that is much cheaper. And our next two stocks are much cheaper. So let's go ahead and take a look. Now, another stock that I'm currently trading in is ticker symbol BIT. And BITX is a leverage ETF to Bitcoin. Now, if you're not familiar with leverage ETFs simply aim to move a multiple of what their underlying stock or sector moves per day. And so we can see BITX is a 2x leverage ETF to Bitcoin. So if Bitcoin moves up 1% for the day, then BITX will look to move up 2% for the day. And in reverse, if Bitcoin were to move down 1% for the day, then BITX will look to move down 2% for the day. Now, there's two reasons why I like trading leveraged ETFs. And the first reason is due to their increased volatility. That means they have more premium per contract than whatever stock or sector that they follow. And then secondly, they're typically a cheaper price than whatever stock or sector that they follow as well. And we can see that is definitely the case for BITX, which is currently trading around $66. And so that makes it a lot easier to sell puts on them because it is a cheaper price. Now, with leveraged ETFs, they are a great tool when you are doing short-term trades on them. However, they are not that great for longer term trades or just investing because they tend to lag whatever stock or sector that they follow over long periods of time. All right, because these leveraged ETFs have to rebalance every single day. And then on top of that, if you hold the shares, then they usually have a little bit higher fees. But knowing that information, let's go ahead and look at a short-term trade for BITX. All right, so first things first, obviously it is up quite tremendously today. All right, and that is because it is crypto week. And so there are things that will be voted on this week that have to do with cryptocurrency. And investors obviously believe that it will be favorable for crypto, which will be favorable for Bitcoin. And of course, we'll get more information on that as the week progresses. But I do think that good things for crypto will come out of this. And so let's head on back to the options chain. All right, so now we're at the ticker symbol for BITX. And I already have trades on it that expired this week. And we are currently up on those trades. However, let's go ahead and take a look at next week's expiration. If we take a look over here, we can see the expected move is about $8 plus or minus. And so what I want to do is I want to be somewhere around that expected move. And so if we minus $8 from the current price of $66.41, that'll get us somewhere around $58. All right. And if we come down to the $58 strike, we can see we would collect anywhere between $89 to $98 per contract. And that is a pretty amazing return considering the fact that it's only a 0.16 delta. All right. So I look at that as there's only about a 16% chance that BITX drops down to that $58 mark by this expiration date, which in other words will give me about an 84% probability of profit. All right, and so I think that anywhere between that $58 to about $59.50 strike is good to go. Typically, I like to stay below a delta of 0.20, and we can see that the delta of 0.20 is right at $59.50. And so just depending on how aggressive you would want to be, I would probably select somewhere in between those ranges. And that is BIT. But now let's look at the last stock, which is SoFi, ticker symbol SOFI. So now we're looking at the chart for SoFi, and we can see it's obviously had a huge run up as of recently, and I've made a ton of videos on SoFi, so I'm not going to get deep into it in this video. Make sure you go back and take a look at the past ones. However, what I do want to point out is that I don't believe that SoFi will be going under 18 anytime in the near future. And here's the reason why. So we can see all the way back to January, if we look at the chart, we can see it hit $18 right here, and then it bounced off, and it bounced off for quite some time. However, just recently it came above 18, and then it came down a little bit, and it bounced right off of this $18 mark here, and then it has been going up ever since. All right, so $18 used to be a point of resistance, but whenever a stock closes above a point of resistance, that former resistance now becomes a level of support. And so I believe that SoFi at worst case scenario in the short term future will have a level of support at the $18 mark. Now, of course, they have earnings later this month, so we'll have to see how that goes. But barring any really, really bad surprises, I think that $18 is a good level of support. However, like I said earlier in the video, those round numbers can also be a form of support just because of the human psychology aspect of it. And so we can see just last week, it went above $20. And then it came back down. And then on the next day, it hit $20 and it came back up. And ever since then, it's been rising up. And so we'll have to pay attention, but the $20 level may be a new level of support for SoFi. So let's go ahead and take a look at a potential trade. All right, so here we are again looking at SoFi's options chain. And again, we know that they have earnings later on this month. And so I want to take advantage of the extra premiums because I think over long periods of time that SoFi will continue to go up. So as you can see, I already have trades in for this August 1st date. And if you're in the community, then you got these trades as soon as I enter them and you are already up on the position. However, if we take a look at them now, looking at these strike prices, I would probably come down here to the strike of $19, which is currently paying anywhere between $51 to $52, which is about a 2.5% return in 18 days and will get you somewhere close to about 5% over the span of a month. Now, I like 19 because it is below that $20 threshold, and then it is also very close to that $18 mark that we talked about previously. But I like what SoFi has going on, and I can't wait to hear what they have planned for the future during their earnings release. But that is it for this video. I hope you have a blessed day. And again, if you would like to join the Trader Freedom community, the link is below in the description. We would absolutely love to have you. And I'm looking forward to getting all of the data that the economy will give us here this week. But I will see you guys in the next one. Peace!